What is going on, everybody? Welcome back to another video. In this video, we are going to go over 3 cheap stocks to run the wheel strategy on. So with that being said, I want to jump right into this video and get down to it. I've been getting dirty money. Okay guys, you guys see the first stock that I like, PLTR. If you guys haven't seen any of my videos ever before, I've made a couple of them here in the past month on this stock. I run this personally. It has ran great. I ran it off the 16.5, the 16, and the 17 now. I'm making great money off this one based off of capital utilization. That's something I think everybody should use. So I just want to go over here and I just want to show it here. And for those of you that are new to the channel, I don't use Robinhood to actually trade, but I love them just to show you guys and their options and just kind of everything overall. And a lot of people start here, so I think this is a good place to show on my videos. And maybe here in the future, I'll throw a couple grand in this account and just show you guys what I do. So me, I don't like to go this far out on this stock. Now, what I will do though is 10 to 7 days. So in this case, I would go out 10 days because I've already took my profit on this week's for the 3-day one. I'm probably going to go up here, and you guys are going to see, I got to go to a put actually. And then the key fact on this one, if you guys are welcome to the wheel strategy, is selling it. So on a 17, which is what I said, I'm pretty normal at selling at here on PLTR. I'm collecting 18 cents a week on $1,700. I showed you guys in my last video how you can minimize this by running a credit spread rather than just a naked put. But PLTR, it's going to have government contracts. I do think that this is a great stock to actually start the wheel strategy. Now again, if you are new and you don't have a lot of capital, be wary of fees with like TD Ameritrade, Charles Schwab, which I believe owns them now, but that's just one thing, because a lot of them are going to charge, 70 cents basically, or 65 cents to get into a trade, whatever. That will eat up in your profit. So a place like Robinhood is not a bad one to do this trade if you have smaller amounts of contracts or you just want trading one. Now, there's 2 of these now. The other one, the second one, is UCO. Now, this is a leveraged fund, and I always want to disclose this. UCO, it is a leveraged fund, and you will see that it pops up with this leverage. Now, I like this stock quite a bit for one reason. I'm not looking to really own 100 shares forever, but I will own them momentarily. Now, this one I trade on a weekly basis as well, and why I don't trade them out my normal 45 to 40 to 35 days out first is because it is a leveraged and it's oil. So the oil report comes out every Wednesday for those of you that don't know. So on this one, I would be looking, and again, we're going to do this we're building up as you guys can see on this one. I'm probably going out a little bit further here on these ones, probably getting around that 15%. You're seeing the delta there's at 13. I would probably actually like to be up around this 26. And this is something you guys are going to see. The last position I did was down here. Now, oil has rallied this week. That's going to make the difference. Again, the report will come out tomorrow morning. So earlier, these trades were actually quite a bit better today during the day. Again, I record these after hours. So I'm probably looking at a 26 here for $25 profit a week. That's where I'm looking at. Now, you're going to say that that's not a great profit. Well, based off of this, I have not held one of these till expiration yet. Normally, I'm out with 75 to 50% profit every single time of credit collected. That's the big thing you have to remember here. So that is number 2. That is UCO, ticker UCO, and that trades oil. It is the bullish oil. There is a bearish one out there if you want to do the research on that one. It's pretty simple Google search. Now, I'm going to give you my third one that's cheap, but I'm also going to give you another one that I absolutely love, and it is my favorite wheel strategy. So if you just bear with me for just a couple seconds here at the end, I'm going to give you my favorite one that I wheel strategy, and I've been doing it for years, and I absolutely love it. So this other one is Bank of America. Again, if you're scared of the bank crisis, this one's not for you. But if you do think that, hey, Bank of America is pretty solid, you can see they've had good earnings the past couple of times here. There is, again, you do have some risk with banks now, according to everybody else in this world right now. I don't personally run the wheel strategy on this one because I think I can utilize that $3,300 if you're doing at the money right now a little bit better. But I do like the Bank of America. It's a solid company overall, and I'm sure if you do this over the long run here, it's going to work out quite well for you. Again, just right now we're in a downturn. The whole market's actually up right now at all-time highs, but you see the purpose behind this one. And the other downside to Bank of America, I'm not going to lie to you guys, is the credits aren't very great, but it's a solid company to continue to do. Now on this one, I would probably be looking for that 45 days out. Now why? Just because there's not very much credit for these 3,000. So you're only collecting $1,500 compared to the PLTR one, which is weekly. And if we go to a weekly on these, you guys are going to see next Fridays, you're just not collecting a lot. 32.5. So it's not fantastic. It's not awful, but you are. Now you guys got to remember though, this stock isn't as volatile as the other ones. So you actually can get a little bit closer to the money. And this one, I would play this 33, looking at 24. I actually don't think that that's a horrible trade as long as you think it's going to stay above that 33 range, which you can see we're only 50 cents away right now. And it's a little bit too close for my comfort. If I'm trading this one, I'm probably going out the one more. I'll take my $12 if I have an extra 32.5. Yeah, basically $3,200 sitting around. Maybe I would jump into this one. So, but my favorite one overall, guys, I'm not going to lie to you, it's a little bit more expensive. Now, it wasn't when everything split, was TQQQ. This one was a lot cheaper. This one has done absolutely fantastic for me. It's not overly priced. You're looking at about 51. Now, here is the difference with TQQQ. It's more volatile, and that's what's really going to push this one up. That's why I love looking at this one. It's going to follow the Qs. Guys, I think this is a really important one. If you've never looked at it, it mimics it identically. And I think that's an important thing to be looking at. So I'm probably going to be looking at around a 45. Now let's see what the difference is here in order to get a 45. And on this one, I probably am going out 45 days just to get pretty far out there. So we'll get 38 days. It's actually 2 days after my birthday on this one. So in this one, you can see the percentages here in chance of profit. I'm going to get out here a little bit further. It's going to give me a 45. Now, let's just see where a 45's at. So, yeah, you're about right there. So, yeah, about where I said is where I would be looking at. In there, 46, this is going to give me a 45. But here's the big difference. I'm going to collect $92 for $4,500, guys. That is your big difference with TQQQ. Guys, I'm not going to lie to you. I have ran this one for the past couple years. I love this one. Really, I honed in on it this year after the stock split on it and did absolutely fantastic. I remember buying this one at 17 and stuff like that and did. Long story short, I think that this one was a great trade. Now, don't get me wrong. I do think that they will split again. What does that mean? Well, they're going to give you more shares. Basically what it means is they're going to drive that price back down so more people can get into it. And when I say this, I say it because it's happened before. You can see that every time it runs up, they have a stock split. Or every time it gets too far down, they will split them and allow you to possibly get more shares or a few less shares. But they make sure that they still have value in this one. TQQQ mimics the Qs. There's also UPRO that does the same thing with SPY. Now, Qs have outperformed SPY quite a bit this year. So, and that's mainly just because on the 3 times leverage ones. So as you can see, if you go back to TQQQ, it's up here at all-time highs. This is probably my most used one. My favorite one is Google. And I just want to show you guys really why here, because I am actually 100% okay with getting stuck with Google. Now, this is going to cost you $13,600, but here's the thing. I'm not ever really risking that much because I will go out 45 days on this one for sure, but this one's only going to give us 38 like normal. And we want to sell a put. Again, this is how you start the wheel strategy. You sell the put, and then you start running covered calls once you get assigned the stock at expiration date when you're in the money. So on these, I run them at 20% every single time. So you guys can see I'm actually, TQQQ is going to give you a better value, but it's more volatile. So Google at 129, and I think this is a pretty valuable lesson. I did the wrong one, but it's pretty much the same. Google at 129. That's why, again, I think that this is just an important thing to look at on these. That's actually 130, so you can actually give yourself another dollar here. There's pretty close. 129.08 for 45 days out. You guys can see it does not move giant chunks except for right here when the whole market pretty much. And they've had some news and things like that. You guys got to be aware that that does happen and things. This is tech, guys. Google is one of the big ones. But with that being said, my favorite is still TQQQ. For beginners, it's PLTR. But if I'm a true beginner, I am going to look at credit spreads. And I think that is something that a lot of people need to. I will tag a video somewhere up around here at the beginning of the video for credit spreads. Look for it. They will help you out as well. Less risk, same probability of winning. And it's a great strategy to start building your portfolio. That being said, thank you guys all for watching this video. I hope this helps somebody else out there, and I will see you guys in the next one.